Hello everybody, this is Lara with your end of the week video for gold for the trading week ending Friday 24th of July. Both gold and GDX look like they're forming blow-off tops. They can take a few sessions to really form, but look out, they can reverse really quickly and sharply. So risk management when a blow-off top looks like it's forming is absolutely essential. I'm calculating higher targets because the targets are being reached and the structure is incomplete or price just keeps on going up. A new target is at 1984 for a third wave to end. The classic analysis target calculated from the consolidation width remains at 1930. I'm going to use a channel on the hourly chart, and if that's breached by a full hourly candlestick below and not touching it, that would be the earliest indication of a potential trend change. A new low below 1887.04 would add further confidence, and that would be probably a better way to indicate a trend change in the end of a blow-off top at this stage. This is the main wave count. It's a bearish wave count because it expects that when supercycle B is over, supercycle C will then begin and make new lows below the end of A, but we are not there yet. And because supercycle A could subdivide either as a 3 or a 5 wave structure, it could be a 5 wave impulse or it could be a multiple zigzag. That means that it's possible for supercycle B to make a new high beyond the start of A, as in an expanded flat. Expanded flats are actually reasonably common structures, particularly for B waves. Here's a really good example of an expanded flat. They subdivide A, B, C, they're labelled A, B, C, and they subdivide 3, 3, 5, and the B wave of an expanded flat moves beyond the start of the A wave. And then the C wave moves comfortably or reasonably below or beyond the end of the A wave. We could be seeing that unfolding at a much higher time frame, at a quarterly chart time frame, for a huge, big, grand supercycle, fourth wave. A, B, and then C, that's possible. And so there's no upper invalidation point for this wave count, because when you look at the monthly charts, that is a possibility for grand supercycle wave 4. The structure here of supercycle B is still labelled as a double zigzag, W, X, Y. W subdivides perfectly as a zigzag, A, B, C. X subdivides well as a double combination, W, X, Y, and cycle wave Y subdivides as a zigzag, A, B, C. The difficulty lately has been calculating a reasonable target for primary wave C to end. If it's only going to reach equality in length with primary A now, that may not be high enough. Intermediate 3 is approaching a target which I had used to calculate for primary C, and so I think about 1980 may be where only intermediate 3 ends. So I've calculated a new target for primary C, for it to reach 1.618 the length of primary A. This target would see supercycle B move beyond the start of supercycle A and make new all-time highs for gold. Within intermediate 3, no second wave correction may move beyond its start below the invalidation point. Let's take a look at the daily chart now for this main wave count, with the end of primary A. There's this point down here, primary B, an expanded flat correction, A, B, C, another good example of an expanded flat. Primary C beginning here, intermediate 1 and 2 complete. Intermediate 3 may end with a blow-off top. Minor wave 5 is a fifth wave to end a third wave 1 degree high, and that's exactly the position in which you find extremely strong movements for commodity markets. And so look out for a possible further increase in upward momentum. It could be over here, and I'm going to use that channel at the hourly chart level, and that price point, particularly that price point I am giving you in the summary to indicate whether or not this third wave at intermediate degree is over. It could be over at any time now. Could be quite close to the end. So look out for the possibility of a sharp reversal. I'm going to give it a new target though for intermediate 3 to reach equality in length with intermediate 1 at 1984, and then intermediate 4 should unfold and should remain above first wave price territory. So far this best fit channel is working really well, so I'll keep it. It's showing us beautifully where downward movements found support along the way up, and price is now moving strongly up and away from that. When intermediate 3 may be complete, I will redraw the channel using Elliott's technique from 1 to 3 with a copy on 2, and I'll use the lower end of that channel to show where intermediate 4 may find support. Intermediate 4 may not move into wave 1 price territory. At the hourly chart level, we're looking at the entirety of minor wave 5, and this wave count still fits with MACD. This is the strongest portion of momentum, and within it, here's the middle strongest portion. So about here should correspond to the third wave, and about here should correspond to the strongest portion, the middle of the third wave, and that's how this is labelled. It fits with MACD, so that's how I'm using MACD to guide my Elliott wave count. I look for the strongest portion of momentum and look to see if that makes sense to see the third wave over about there. And then within the third wave, I look for the strongest histogram reading to see, does it make sense, or can I label the middle of the third wave about there? And if you can do so and the subdivisions fit and it meets all Elliott wave rules, then that's the higher probability wave count. So that's how I'm going to label minor 5. It fits within a very tight best fit channel. While price remains within this channel, assume the upward trend will continue. And so I'm developing a higher target for you for minor 5 to reach 1.618, the length of minor 1. Within minor 5, sub-minuet 4 to come may not move into wave 1 price territory, and so a new low below this price point could not be a fourth wave correction within minuet 5. At that stage, minuet 5 would have to be over and the channel would have to be breached, and so at that stage, a new low below that price point could be an early indication that the blow off top for minor 5 to end intermediate 3 could then be over. At the weekly chart level, this is my alternate wave count. It is bullish. It considers the idea that the bear market for gold was over back here in December 2015, and there a new bull market began. There are problems in terms of subdivisions here though. If we see a bull market beginning here, the first move off lows must subdivide as a 5-wave structure, either an impulse or a leading diagonal. From here to here, we can see an impulse complete. It's really problematic to see it over there, and so I'd rather see it over here, but now we have another problem. Here is where I will see cycle wave 2, but even if I see it over here, the problem is the same. Within this structure, this is an expanded flat correction, A, B, C for this labelling. The problem is within C. It must be a 5-wave structure, and here's a second wave, but there's a really obvious triangle in here. You cannot label a triangle as the sole corrective structure for a second wave. Triangles, when they are the sole corrective structure, will only occur in B and fourth wave positions. They will not occur in second or A wave positions. And so ignoring what looks like a very obvious triangle must reduce the probability of this wave count. So in terms of Elliott wave, that's one reason why it's an alternate. But let's consider all possibilities, and then we rank them in order of probability. Sometimes a lower probability outcome does occur, and the very nature of probability means that when it happens, it's never going to be what you expected, it's most likely. But you have to be open to lower probability outcomes occurring and have a roadmap to use if they do occur. That's what I'm trying to do here for you. If this is a third wave, then we have 1, 2, a third wave continuing here with 1, 2, 3, 4, and the fifth wave extending. That's pretty common for a commodity, so this follows a pretty common pattern for this part of the wave count. A new target is for cycle 3 to reach 4.236, the length of cycle 1. Not an extremely common Fibonacci ratio, but not unusual for this particular market, especially when the first wave is so very short, and so that's entirely acceptable. When cycle 3 is complete, then cycle 4 may not move into cycle 1 price territory all the way back down here. Let's take a look at the daily chart level now. We're intermediate 1. Is this high here? Here's 1, 2, and we're looking for the end of 3, and then we'll have 4 and 5 to complete a 5-wave impulse for primary wave 5. a target now for, a limit for intermediate 3 for how I have this labelled. If I've got this right, with minor 1, 2, and 3 and 4 here, 4 is more brief than 2. That's absolutely fine. That's actually really common for this particular market, or for commodities in general, but especially for gold. But if 3 and 4 are over here, then 3 is shorter than 1. 5 would then be limited to no longer an equality with 3. If upward movement passes this limit, it's a limit, not an invalidation point. It's a limit. What that means is the way I have this labelled in here is wrong. That would be a bullish signal. If the limit is passed, then I'll have to relabel intermediate wave 3 and consider an alternate idea and calculate a new target. Intermediate 4 may not move into intermediate 1 price territory. At the hourly chart level, I'm labelling minor wave 5 exactly the same. So the short-term invalidation point is the same. The channel is the same. A new low below this point would be early indication we may have a high in place. It's not so clear at the weekly chart level, but there's a blow-off top back here at the daily chart level. And I want to have a look at that when we get to the next chart. But for now, here at the weekly chart level, volume is supporting this upward movement. Now, this could certainly continue further, and it could get stronger. But this kind of behaviour for this particular market is a warning that volatility is high, and when the blow-off top is complete, the reversal will very likely be very sharp and really quick. So risk management in this kind of market is really, really important. Look for support initially about 1800 to be fairly strong. Volume is pushing price higher this week. That's good to see for bulls. I'll be expecting more upward movement. I don't think it's over yet. On balance volume, last signal it gave was bullish. It's making new highs with price, supporting new highs in price. ADX is a little bit of a concern for bulls though. It reached very extreme for this upward trend. It didn't really decline much during this consolidation, and now it's it's extreme again. It's above both directional lines. It's increasing, telling us there is again an upward trend, but it's already, or rather still, extreme. ATR is declining as price moves sideways and now higher up until this week. It looks like now price has overcome resistance about 1800. Some energy has been released, and I'll expect it could continue for even another week or two, possibly. We've been over ATR. Another cause for concern for bulls is there is still double bearish divergence. It's getting a little bit weaker for the second divergence here anyway. Sometimes divergence just disappears, but all we can say with this at the moment is with the data in hand, it does give us cause for some concern. Risk management is essential. Stochastics is overbought and MACD fully bullish. What about the daily chart level? Up until this day, volume was nicely supporting upward movement. Friday's a little bit weaker, but that's only one day. There is no bearish candlestick reversal pattern, which is something I will look for before I call for this upward movement to be interrupted by a consolidation or for a trend change. I will be looking for a bearish candlestick pattern on the daily chart and or one or more long upper wicks to develop. We do not have that yet. There is an upward trend in place. Assume the trend remains the same until proven otherwise. But when volatility increases like this, manage risk. RSI is now overbought. It can reach further overbought, and it can remain there while price moves quite a considerable distance. It is an early warning of an approaching end. On its own, it does not mean upward movement has to end. I will look for RSI to reach overbought and then to exhibit bearish short-term divergence before I expect a deeper pullback may be developing. And that can happen after the blow-off top. The blow-off top isn't actually usually right at the end of a movement. You'll see a blow-off top, and then you'll see a pullback or consolidation, which can be quite deep and sharp, and then you'll see another high. And when that second high happens, then you'll see bearish divergence. That's really common behaviour for this market. So this upward movement is not done yet. ADX is indicating an upward trend. ATR declining, there is some weakness. Stochastics overbought and MACD bullish. That's all for me this week with your gold analysis. I hope all our members are having a fabulous weekend, and I hope you and your families are all staying safe and well.